shares declined sharply in Asia on Thursday. Japan's Nikkei 225 dropped or lost 1.9% to a level of 26,402. The decline was affected by a broad retreat on Wall Street, which was triggered by worries over the impact of persistent high inflation on corporate profits and consumer spending. The Federal Reserve is trying to temper any impact from high inflation, or the highest inflation in 4 decades, by raising interest rates. And many other central banks are on a similar track. But the Bank of Japan has stuck to its low interest rate policy, and a gap between those Japan's benchmark rates has pushed the dollar's value up against the Japanese yen. Japan reported a trade deficit for April as its imports ballooned 28%. Although Japan is the world's largest and third largest economy, it has struggled to face surging energy costs amid the war in Ukraine and a weakening of the yen against the US dollar. Well, several global financial institutions are looking to China's financial capital, Shanghai, as an engine of future economic growth. The leading U.S. investment firm Neuberger Berman has raised $270 million in Shanghai by China's Qualified Domestic Limited Partners scheme since 2018. The firm applied to increase its capital allocation quota under the scheme in April. The QDLP scheme, which launched in Shanghai in 2013, is a pilot program developed by Chinese financial authorities. It allows foreign and domestic asset managers to raise capital from high net worth and institutional investors in China for the purposes of overseas investments, while quotas for the amount of investment capital that can be raised are set by regional financial authorities. By seeking to raise more capital in Shanghai, foreign investment firms are signaling their confidence there.
But also for the Asian region, right? Given its special status, given its geographic location to all the